Investing in the stock market is risky. The initial profits are good, but soon your emotions take over and you become too greedy. In the end, you lose money. A safe bet is to put your money in a CD or savings program with good interest rates. It is also advised to get a money manager to help you. So I said, the initial profits are good, but soon your emotions take over. So when your emotions take over, that means you're no longer thinking logically. You're thinking more with your emotions. So in this case, it's greed. So you keep wanting more and more. That's your emotions taking over. And then I said, a safe bet is to put your money in a CD. A safe bet is when you're gambling or if you have to make a choice, it's the less risky of the other choices. So let's say you go to a new city, you're unfamiliar with the food. A safe bet would be McDonald's because you know what you're going to get. McDonald's is the same everywhere around the world. So if you don't think the food might be, a little dirty or unhealthy or maybe too expensive, a safe bet is always McDonald's. And then to put your money in a CD. A CD is a certificate of deposit. These are it's a way of putting your money in a bank. And if you put it in for 3-year, 5-year, 10-year, 15-year, the interest rate is higher. You cannot take the money out, but a CD is just a higher interest rate of saving, but you have to keep your money in there. You may lose your shirt in the stock market. Buying equities, especially in a volatile market, is not a wise investment choice. Stashing your money in the bank or hiring a financial advisor is a much safer option. So I said you may lose your shirt in the stock market. To lose your shirt means you've lost a lot of money. It would be so much like you'd have to take the shirt off your back to pay for something. So if someone says they've lost their shirt, it means they've lost a lot of money. It doesn't mean they've actually lost their t-shirt. And then I said buying equities. Equities is another way of saying stocks. So if you buy equity in a company or equities, that means you're buying stock in the company. And I said, especially in a volatile market. Volatile means it's unstable. It's going up and down every day. It's unpredictable. We also use volatile if, for example, you're mixing chemicals. If they're volatile, they're about to explode. Also, if people are very volatile, they're kind of emotionally unstable. And then in the last sentence, I said, stashing your money in the bank. To stash something means to hide something or to put something somewhere. It's kind of an informal way of saying putting your money in the bank. Stash it in the bank. That means put it there and also don't touch it. Don't fear the stock market. As long as you do your research and don't get too greedy, you can make money. The higher the risk, the higher the reward. You shouldn't jump into the stock market head first. Take some time to do some background research about the companies you invest in. With the proper preparation and understanding, you can make money in the market. There is more potential to make money with stocks than putting it in the bank. So the first part, you shouldn't jump into the stock market head first. If you're jumping into something head first, it means you're kind of rushing. You're getting into something without preparation. You're starting to do something too quickly. So you kind of we say you want to jump in feet first. Means you kind of want to touch the water with your feet. Make sure if it's too cold, too warm. See if it's shallow enough where you can stand. But if you jump in head first, you may hit your head and hurt yourself. So we kind of use it as, when you go into something, don't go in head first. It means kind of prepare and take your time. Thanks, guys. And don't forget to follow us on Instagram at MATTSSAM. Also, check out the Konglish Killer book. It's online and out in print soon. Bye-bye.